Hello everyone, welcome to Search for Yields by NR Bonds, fortnightly newsletter. I'm Nikhil, and in today's topic, I'll be discussing with you about the corporate bond market updates, both primary and secondary point of view. In this month, we have seen the two major events in the Indian market. That is, one is yearly fiscal deficit by Government of India, and as well as RBI policy, monetary policy outcome. You must be aware of the budget analysis where the finance minister announced lower gross borrowing this year compared to the last year, predominantly because of the higher tax revenues and also we expect a lot of FIIs inflows in this year as the G-Secs are included into the global bond indices. The amount which is we expect in inflows is close to USD $30 billion in the span of from June 2024 to September 2025. So this can increase the demand for G-Secs and also where the supply is likely to meet the demand, so which can poise to rally in the G-Sec market. So post budget, we have seen G-Secs rallying across the curve. The curve is currently the flattish. We beat 5-year, 10-year, and 30-year bonds are at a flat rates in terms of 10-year is traded at 709 and 14-year bond is at 711 and 712, and the longer end of the curve is also where the yields are at not higher compared to the shorter end. And coming to RBI policy meeting, we have seen RBI setting the inflation target at 4%, which is at the lower end of the targeted zone, and says that they're comfortable with the current growth of 7% GDP. And in any scenario, they will be coming out with some liquidity tools to manage the liquidity. But however, cutting the interest rates is unlikely to happen till March 2025. That's what we info from the RBI policy meeting. So based on this, both events, the corporate bond market movement have been almost, we can say, little muted. After the budget, we saw the AAAs and AA yields fell a little bit close to 5 to 10 basis points across the curve. But post RBI policy meeting, it has set off like the yields rose slightly. The market sense that the liquidity is unlikely to come in any form from the RBI in the near term. So we saw the decade high of liquidity deficit in the market during the end of January and starting month of February. So this tight liquidity conditions can lead to lenders coming out with more bond issuances in the private placement and as well as public debt IPO as well. And RBI has been working very strictly on cutting down on the lenders with which do not comply and as well as which are completely highly exposed to unsecured loans, and also doing evergreening options of selling down the NPAs to the AIFs and investing into the AIF units. So the whole this evergreening option for the lenders had cut down by RBI in the month of December, and they had given 30 days for these lenders to stop this practice and sell the units in the AIF if possible. Otherwise, you can write down as a provision in the income statement. So following that, we have seen HDFC Bank, Piramal Enterprises, and even SBI Bank and many of the banks coming out with provisions related to the AIF investments. So this could be probably not the complete picture on the provisions provided in terms of AIFs. And as we also expect in this current quarter, the Q4, we'll see the complete 100% provisions related to the AIFs. And most of these AIFs are closed-ended schemes, so they have to hold till maturity of the fund, which is like typically they have 3 to 4 years. So maybe after 3 to 4 years, if the value appreciates and they can write back the provisions. Otherwise, for now, the provisions are slightly to be higher in terms of AIF related. And coming to the public debt IPO, we have Agro Capital issuing bonds across starting from 18 months, which is both annual and monthly coupons. So you can hop on to QuickInvest by INR Bonds, which is a SEBI-registered platform. You can apply for the primary debt IPOs and as well as participate in the secondary market trades and also in the G-Sec, invest in the G-Sec as well. And by end of this month, Navi is also likely to come out and open with the 600 crore kind of a debt IPO. Thank you for listening in. Do subscribe to our YouTube channel if you are not done so. Please note, investments into the markets are subject to risk. Please read the offer documents carefully before you invest. Thank you for listening in.